Updated November 3, 2017 09-1213. Jerome J. Powell's elevation to be the new boss at the U.S. Federal Reserve was not one of President Donald Trump's famed curveballs. Key points: Trump appoints current Fed Governor Jerome Powell as central bank's next chair. Powell represents continuity and is unlikely to change current policies. Powell is not an economist, but a lawyer with experience in investment banking, and while a Republican, was appointed to the Fed by Barack Obama in 2012. Despite Mr. Trump's fondness for unorthodoxy, Mr. Powell is regarded as the continuity candidate to replace current Fed Chair Dr. Yellen when her four-year term expires early next year. He has proved to be a consensus builder for the monetary and financial policy that he believes in. Based on his record, I am confident that Jay has the wisdom and leadership to guide our economy, President Trump said at media conference with Mr. Powell at the White House. Mr. Powell will become the most powerful public servant in the U.S., and arguably the world, as the 16th person to hold the post since it was established 103 years ago. He is an insider, having been on the Federal Reserve Board of Governors since 2012, getting his leg up from Democrat President Barack Obama. Despite that, he is a genuine Republican. If there is a hint of unorthodoxy in Mr. Powell's appointment, it is that he does not have a high-level economics degree on his CV. He is a lawyer by training, but with deep roots in investment banking at Bankers Trust and private equity with the Carlyle Group. He doesn't appear to be in it for the money. At last count, his stated net wealth is between $20 million and $55 million, making him one of the wealthiest U.S. central bankers since the 1940s. The salary is not that great, comparatively speaking. He'll be on about $200,000, $260,000. That's about a quarter of the money he'd get running the Reserve Bank of Australia and a fifth of the top job at the Bank of England. Why will he be the most powerful banker on the planet? As the chief lever puller for the world's largest economy, he holds the global economy as his thrall. He is also in charge of the world's dominant currency. Pushing U.S. interest rates up or down dramatically changes all currencies, and in turn all economies, across the world. The Fed, by its monetary policies, can create or destroy jobs, manipulate inflation and spending power, and all else fails it can simply print more money to prop up the whole crumbling edifice. At one stage, the Fed's unconventional quantitative easing QE program was creating about $90 billion a month out of thin air on its way to expanding its balance sheet by a difficult-to-imagine $4 trillion. While QE has made a lot of people very wealthy as prices for assets like shares soared in the wake of the GFC, backing out of QE and getting interest rates back to normal will not be easy. The position is also extremely independent of the White House. If a president doesn't like what is going on at the Fed, getting rid of the incumbent chair is not as easy as saying you're fired. What does the Fed chair do? While the chair is just one vote on the 12-member rate-setting Federal Open Market Committee, it seems to have inordinate power. Mr. Powell's two predecessors, Dr. Yellen and Ben Bernanke, were said to have come from the consensus school of chairing before that. Alan Greenspan had a more imperious approach. All got basically what they wanted policy-wise. In a nutshell, Mr. Powell needs to deliver on three objectives in the Fed's mandate: maximizing employment, stabilizing prices, and moderating long-term interest rates. Apart from that, the chair is the public face of the Fed. He or she fronts the media after most meetings and testifies to Congress twice a year on the state of the economy and monetary policy. Every utterance is analyzed for a hint of dovishness or hawkishness, whatever is in or out of vogue at the time. Consequently, a lot of what a Fed chair says is fairly opaque. Or as Mr. Greenspan is famously quoted as telling a Senate hearing in 2005, "If I seem unduly clear to you, you must have misunderstood what I said." What is going to change? Nothing immediately. Mr. Powell supports the current path of very gradually raising rates and running down QE. He has never dissented from a decision made by the Yellen Fed over the past years, and dissent is not uncommon among voting members. That is important as interest rate decisions are the main game at the Fed. His front-running status to take the top job in recent weeks has not moved the dial on bond markets, so the desk jockeys and computer bots are not expecting a change in tack. He certainly has a much more open mind about greater deregulation of the finance sector than Dr. Yellen, a stance that lines up fairly neatly with President Trump in pretty well all Republicans. And that is a significant change, according to John Others writing in the Financial Times. While Mr. Powell breaks a long sequence of academic economists with an interest in monetary policy to head the central bank, he does bring a great interest in regulation to the post, Mr. Others wrote. Banking regulation has become, if possible, an even hotter political potato than monetary policy, and there is a long record of unpredicted consequences from changes to banking regulations. How does it affect us? The theory of economic relativity says with the RBA unlikely to shift rates anytime soon, probably not even next year, and US rates on an upward trajectory, the Australian dollar should weaken against the greenback. That would make the RBA happy. It helps our exporters and would import some inflation. But that has been the theory for some time, and nothing much has happened. The dollar remains stubbornly high, and from the RBA's point of view, inflation is below where it should be. If the cross rate with the US dollar is any guide, very little will change. There was a minor spurt on the news, then the dollar settled back to exactly where it was leading up to the announcement. The real impact is somewhere down the track as unwinding the Fed's extremely loose monetary position gathers pace. If it goes wrong, it won't just be Australia that suffers. It will be economic chaos on a global scale. Topics: Money and monetary policy. United States. First posted November 3, 2017. 083813.